30 here in London, so we'll make a start. Thank you for joining. Our webinar today is called CBDC, Central Bank Digital Currency, CBDCs, and Cyber Security, Resilience Considerations when Developing Digital Money. I'm Ian Hall. I'm the editor of Global Government FinTech, which is a sister title to Global Government Forum. Both our publications report on innovation in the public sector to serve our core audience of public servants around the world. We're holding the webinar on the 14th of November 2023, with interest growing among governments worldwide in the possibilities of central bank digital currencies. I just wanted to frame today's discussion with a quick few points about CBDCs. So we've got a slide on the screen now. The kind of global, they often call this the central bank for central banks, is the Bank for International Settlements, and both based in Switzerland, and both CBDCs and cybersecurity are among the ongoing priorities of the Bank for International Settlements Innovation Hub. They've done various projects combining the two, so it's a good guide that this is a hot topic, certainly among central banks. I imagine a lot of our audience are following CBDCs closely, but there'll also be members of the audience who maybe know of the word CBDC, but haven't been following it so closely. So during the discussion, we may be talking at some points about retail CBDCs, which are also known as general purpose CBDCs. But there's also a kind of parallel type of CBDC called a wholesale CBDC as well, which is more for interbank settlement. So our panel will try and make our conversation as understandable as possible. I just thought I would introduce the topic by pointing out that there are two main types, retail and wholesale CBDCs. In terms of actual CBDCs worldwide that are live, there are a few examples. The first is the Sand Dollar in the Bahamas, which has been live for around 3 years. Then there's the Eastern Caribbean Central Bank, or Eastern Caribbean Currency Union's DCash. Then in Nigeria, there is the e-Naira, and in Jamaica, there is Jamdex. So they are 4 examples of CBDCs that are live. Kind of probably the highest profile is China's CBDC, the eCNY. I think it's still yet to have a full launch, but there are kind of regular new innovations by the authorities in China to try and drive use of central bank currency in China. So I think for various reasons, that's certainly the biggest and probably the most interesting project that people are watching. And we're gonna start today's webinar with a presentation from Brazil. So I couldn't not put Drex in Brazil as one of the CBDCs to mention on this opening slide. So we look forward to hearing about Brazil's CBDC shortly. We are a media, so I just wanted to highlight some of the coverage that we do a lot on CBDCs in general, but I wanted to just highlight some of the coverage we have done on CBDCs, specifically and cybersecurity. The most recent one actually being just last week. I mentioned the Bank for International Settlements in Switzerland. They had a 2-day conference last week that was actually on this topic, and so I think one of the main articles on globalgovernmentfintech.com right now is the opening remarks of that conference by Augustin Karsten, who's the head of the Bank for International Settlements, talking about precisely this topic today. The other story I just highlight on there is that the one that's illustrated with a kind of a yellowy gold pound coin, I think that is, or 2p piece from the UK, which is titled UK Researchers Examine CBDCs and Cybersecurity. And that's how we got in contact with another member of our panel, Jeff, who's going to speak today as well. And that was a couple of years ago, but that was a project on that topic that Jeff was leading. So these are the 3 questions. We're going to go some opening remarks and then try and tackle these 3 questions, which I hope will interest you, the audience. And those questions are: how are the biggest cybersecurity threats facing CBDCs evolving? To what extent and how are retail CBDCs a greater cybersecurity risk than a wholesale CBDC? And how important are technology solutions and design choices to keeping CBDCs safe? So they're the kind of 3 questions that by the end of the hour plus, we're hoping to have have wrestled with. But we're going to begin with opening observations from Aristides in Brazil, Franco, who's in Washington, and Jeff, who's in London. And we aim to save about half the time for questions from you, the audience. So there's a function at the bottom of the screen for you to type in those questions. Please don't hold back. Send them in. We'll put them to the panel and try and answer those questions. So thank you in advance for those. So hopefully that was a decent enough introduction to get us in the zone. But we're going to start with Aristides in Brazil, who has worked for Brazil's central bank, I think, for 25 years. He's deputy head of the central bank's IT department and chief of cybersecurity and the technological innovation office in Brasilia. So Aristides, over to you for your opening comments.
Thank you, Ian, thank you, Global Government Forum, for the invitation. So my name is Aristides Cavalcanti. I will share a little bit about our CBDC project. Our CBDC project directs in the questions around cyber resilience. Next. So when we're talking about CBDC, it's important to highlight that we are increasing the payment infrastructure in a critical payment infrastructure. So that should operate in a secure and efficient way. That means that enable secure transactions, prevent disruptions in payment flows, and fraudulent payments. It's important to highlight that if you have any problem in a CBDC, operational disruption or prevalence of fraud, that not mean a damage on the digital currency instrument, but could be a damage in the image, on the reputation of the central banks, that could be an impact in the economy. So, and when we're talking about CBDC, we are amplifying the infrastructure in terms of payments. That means that we are talking about the retail payments. We have to deal for personal information, for example. That could be a huge concern when you have data protection laws around the globe. So, and the main concern, because the central banks as regulators, the regulation is based on principles sometimes, but when talking about the cybersecurity needs, we have to be more deeply in the questions and the details about cybersecurity. That means there will be more operational definitions in terms of cybersecurity. Next, please. So, cyber resilience, it's an important question to any critical payment infrastructure. We're not talking about cyber resilience. It's not about cybersecurity. That means a cyber attack. That means that your system should operate 24/7. For example, you have high availability and high scalability. That means you have to have the capacity to process thousands of transactions per second. But when you're talking about technology, any component can fail. So how to deal with this trade-off that we have a critical infrastructure and should know that any component can fail. So the second question, we talked about retail payments. Sometimes central banks has only concern about their infrastructure. But when talking about retail payments, our concern should be beyond to our infrastructure. That means our concern, for example, the standards that are adopted by the payment service providers. For example, a data leak in an app provided by a payment service provider could be a data leak from your infrastructure. So our concern that should define standards to be beyond our perimeters. That means definition of standards should be adopted by the payment service providers. That's aligned to the concept of endpoint security that are discussed in CPMI from BIS, for example. We should have a proactive monitoring in our process, in our infrastructure. Next, please. So, what is DREX for us? It's important to have a moment here. Brazil has PIX, many people know about PIX, our retail payment system. that should be a huge impact in Brazil. 50 million of Brazilians made their first bank transfers due to PIX. We had 19% of adults with a kind of account. And why Central Bank of Brazil is looking to CBDC? In Brazil, we are looking to CBDC not to provide a retail payment system. We are looking to CBDC thinking about a tokenized economy. That means we have to provide a platform to the private sector to develop new business models inspired on the DeFi environment. In talking about the DeFi environment, we know that has a lot of problems, a lot of gaps of governance, but the technology that has been used in the DeFi environment are very interesting. So our focus is to deliver this platform, an EVM compatible platform in a permission network. Only regulated institutions can access this network with an open source technology with multi-suppliers. That means that we not only depend from one technology providers, and has a little number of projects in production. So we choose Hyperledger Bezel for this pilot. And next, please. So our focus is in a tokenized economy, as I said. So in the Drex pilot, we designed some questions in terms of cybersecurity. For example, we are in a pilot phase. That means no production data, because we have a lot of questions around the technology, a DLT technology. We are in a private network that only regulated institutions can access, and using the best practice in terms of security by design. Of course, Brazil, Central Bank of Brazil has a previous experience in all the payments infrastructure, our RTGS, PIX, for example. But it's important to have the engagement of the technology providers and the participation of the financial industry in a collaboration environment to develop this pilot, to develop the standards of the cybersecurity around PIX. So, next, please. So, but it's important to say that we are not talking about specifically about DLT technology. It's important to go further than that, because it has a lot of problems in terms to use a DLT technology. For example, we have to have an unauthorized access, for example, that causes a problem. That means this unauthorized access can see information that is not available, that is not complied with our regulation. That in the second question, the data leakage, because the data is stored in a decentralized way. So if you adopt a cryptography, but this data is stored and this cryptography could be broken, that means you have a problem of data leak. It's interesting because when I'm talking about the ownership of the CBDC, is not based on what financial market infrastructure can say what is the ownership, but who has the ownership of a private key of the wallet. So if you lost your private key, you lost your money, you lost your access. So sometimes it's difficult to people to have direct access or to have control about that. So you have a lot of concerns about the management of the property of the ownership of the private keys that cause problem in the brick encryptation. And the last one, the smart contract, because the smart contract is a code, and any code could have branches to cyber threats. So a smart contract fraud could cause impacts in the financial sector, in the property of the ownership of, for example, CBDC, in a transaction that should not happen with an expected way. So when we're talking about DLT technology, we have a long way to run to get mature enough to a cyber resilience that could be compliant with a critical payment infrastructures. Next, please. So as a central bank, you have to use, of course, the best practices in terms of frameworks to evaluate each step to achieve maturity required to financial market infrastructures. That could be a challenge for central banks, because some central banks has not expertise to operate a financial market infrastructure because many of them delegate this to the private sector. My advice is to not to solve these problems alone. Develop pilots in partnership with the private sector. Change experience, change views to build these pilots. It's interesting because I said before, because in 2018, when I talk now in development of PICs in our Lift Lab, our innovation lab, we did proof of concepts pilots to use a CBDC to a retail payment system. So after this proof of concept, we saw a lot of problems technology. You decided not to use DLT to provide a retail payment system. We decided to use other kind of technology to build, to implement PICs. And the third one, people. When talking about cybersecurity, we have to invest in people and cyber resilience skills in your infrastructure, in your company. That is something very necessary in the current days. So it's my message here. Thank you very much for this opportunity.
Aristides, thank you so much for that kind of tailored presentation for the webinar. I think the particular slide on the 5 threats, so unauthorized access to the network, data leakage, really at the heart of the kind of question we're asking today, and actually, in a sense, are the creation and not really the development, but the creation and launch of CBDCs actually creating new risks and new threats, which you're right at the heart of as kind of head of cybersecurity. Before we go to Washington and to Franco, I just have one question, which is on the timeline for DREX. So Brazil's CBDC is called DREX.
Yes.
You've emphasized that you're kind of in a pilot stage. Is there I guess there is a timeline to a full launch. Is there a set date when Brazil is aiming or has agreed to launch the CBDC?
Our challenge is the technology. For example, we are using DLT technology, but the privacy provided by DLT technology in our use case, that is the thinking about developing, it's not compliant with the bank secret and data protection law.
Right.
That's the problem in DLT technology, because when you're talking about many technology providers around the globe, what is the use case? Our use case in the pilot, it's a DVP between a CBDC and a government bond, a tokenized government bond.
Okay.
I can provide this transaction in a private way that could be compliant with the bank secret and the data protection law. That's the challenge that we have. So we are in a pilot phase, working together with the private sector, how to deal this private issue before we move forward in our DREX projects.
Thank you.
We have a deadline until May to develop that.
Thank you. I know from the couple of chats we've had, particularly with Jeff before, as we were planning today's webinar, that kind of data privacy, data protection issue is something that he's got a project at the moment that's partly involved, I think, with that, but he's got a real interest in that. So Jeff, maybe already we could come back to that issue afterwards. But thank you, Aristides in Brasilia. Let's go to Washington and hear from Franco at the IMF. So Franco works in the IMF's IT department's digital advisory unit as a senior digital expert covering cybersecurity and digital risks. So over to you, Franco, for your opening comments. Thanks in advance.
Thank you, Ian, and thank you everyone for coming to this webinar series. Next slide, please. So just to start with, I'll just provide a brief discussion on how we assess the cybersecurity landscape and how these may change or may challenge the central bank cybersecurity operation, and also may challenge the central bank that want to embark into the CBDC project. So just to set some context, big tech companies and fintech are the transformational model that are taking advantage of some technological advancement in creating and developing new solutions that are changing the way that we do business, the way we transact, and the way that we live. And these are putting the central bank under pressure to adapt with these changes. And in responding to this, we are seeing central bank modernizing their IT system and their infrastructure to cope with these changes. However, this modernization introduces some complexity, which from the cybersecurity point of view may expand the attack vector and introduce new digital risk. Also, during this modernization process and implementation of new digital payment system like CBDC, central bank may want or may require to shift their architectural model from the closed network architecture to the open network architecture. Traditionally, and as Aristides has just mentioned, the central bank have this closed network, which is protected by perimeter defenses. And few organizations that are trusted have access to this central bank network. However, when we think about introducing new payment system like retail digital currency, this may need the central bank to expand their access level so that general public will have access to the retail CBDC, which means that the general public who used not to have access to the central bank network will now have access to the central bank network. And from the vulnerability perspective, this means that from the traditional way that the central bank used to work in a closed network, now this shift may require them to go to an open network. That means this exposes the central bank vulnerability to the general public, meaning we can have also bad actors that can take advantage of any vulnerability that may exist in the central bank network. Again, we are aware that many organizations have constrained resources when it comes to cybersecurity, which means that there is a challenge for the central banks to balance how to address cybersecurity capability building, as well as raising awareness when they think about introducing new payment systems, such as CBDC. If we combine all these challenges, we see that all of them are expanding the attack surface of the central bank network. But that is not the only thing. We know that cybersecurity attackers are sharpening their skills and their capabilities. They have a great focus to attack the financial sector because there is where the money is. And that is not the only pressure. We also know that there are geopolitical conflicts that carry along some cyber wars. And these can have collateral damage to the financial sector. So ultimately, any potential attack can have high impact to the central bank or to the financial sector. Next slide, please. Next, please. It is also important to associate or to relate how some operational challenge may as well impact cybersecurity and vice versa. So to start with, an operational failure can create a vulnerability that can be exploited by an intruder and impact the cybersecurity of the central bank. On the other hand, a vulnerability as well can create an operational failure, which may also put the central bank payment system offline. I'll just give two examples into this point. We are aware of the ECCB, the D-Cash CBDC, that went offline last year because of the unexpired cybersecurity certificate or digital certificate. From a cybersecurity point of view, an expired cybersecurity certificate implies that this is a vulnerability. Thankfully, this wasn't a cybersecurity attack, but it resulted to an outage of the central bank CBDC for over 2 months. We are also aware of the technical glitches on the e-Naira wallet application soon after it was launched in October 2021. While these are the technical glitches or technical challenges, it made the authority to take offline this e-wallet application. So the lesson then that we are getting from these two examples is that the operational challenges or vulnerability can impact the central bank payment systems, and these may undermine the confidence that the citizen or business may have to the payment systems. And on the other hand, it may impact the adoption rate of these payment systems or new payment systems. Next slide, please. I would also want to touch a little bit on some common problems or some common challenges that we find that many authorities face when they want to embark in cybersecurity journey. Some of the common problems that we are finding is the internet and power outages. There are also very few jurisdictions that have new or up-to-date data protection and privacy regulation, and very few jurisdictions have identity verification systems. So combining all of these, we see that the authority need to really assess their readiness and to determine whether their cybersecurity posture or maturity level commensurate with the evolving data or cybersecurity landscape before even embarking to the cybersecurity, to the CBDC journey. Thank you, and I'll pause here. And thank you, Ian. Take the floor, please.
Thanks, Franco. A really good kind of overview again. It's I'm struck by that. I think it was your first or second slide that had that red flash with expansion of attack surface on it. And I have to say, if I was in a job such as Aristides, i.e. any form of cybersecurity role, anything that visually shows expansion of attack surface, I'm not a technology specialist, but that would, I don't like the look of that, shall I say, but also a couple of examples you referred to there. In my opening slide, I mentioned the kind of 4 examples of central bank currencies that are kind of live, and you mentioned a couple of them there, I think. So Dcash, which indeed had a 2-month service interruption due to the, I think at the time they said, was it updating the certificate management or whatever of the technology, and then also the e-Naira in Nigeria, the e-wallet app going offline as well. So, you know, it hasn't, you know, these examples show that it hasn't been the smoothest start for some of these CBDCs, but so many issues to kind of come back with. I just want to sound questions from the audience. I see we've had a couple in already, so thank you for those who've already sent in questions. Keep them coming. But now let's thank you, Franco. Let's go from Washington to London and over to Jeff for your introduction to your take on the topic. Yeah,
So thank you, Ian. So I'm a lecturer in financial computing at University College London, and my focus is on socio-technical systems in financial services, particularly related to digital payments and the future of money. So I am the director of a new initiative called The Future of Money, where we explore some of these questions. Before I begin, I'd like to acknowledge some of what Aristides and Franco had said in their presentations, and suggest that really, when it comes to retail payment systems, the core problems really fall into 3 categories from our perspective. One is the use of centralized systems, because centralized systems that process transactions and keep records can potentially be compromised, and that means that they can potentially be used to deny service but also to change the history of what happened. So the history of transactions, the history of who has what, and so on. And that creates a problem. The second issue is the use of identity and authorization. So identity-linked authorization creates opportunities for identity theft, and of course the entire set of challenges associated with the protocols that can facilitate identification. And finally, one major problem is account-based transaction models. And this is to say that with systems that have transactions linked to accounts, then this can potentially reveal information about transacting parties. So that means that now we have significant cybersecurity requirements associated with the protection of data that come out of the information that is associated with these transactions that might be stored somewhere. So with that, I'd like to introduce what we have been doing here at UCL on this topic. Next slide, please. So we've designed a system that is, over the course of the last 6 years, an approach to digital currency, which is really about establishing a mechanism by which one consumer, one user of digital money can exchange digital tokens directly with another. And the purpose of this is not to replace physical cash or bank deposits. And indeed, we don't think that central bank digital currency will replace or can replace physical cash or bank deposits. We think that those tools are important and they serve certain purposes, but nonetheless, we need to have a mechanism by which individual persons can engage with the digital economy, which means we need a way for them to be able to pay for services at a distance, and we need a mechanism by which they can pay using digital assets that they own. It's also really important to note that this is also about monetary sovereignty for central banks, because there is an intrinsic risk that if we are transacting with something that is not actually under the control of the central bank, then that means that central banks are at risk of not being able to implement monetary policy. And the reason that this is an issue is it's not so much an issue in places like the US or the UK or the EU, but it's more of an issue in certain places where there's a chance that transacting retail consumers might actually prefer to transact in a currency that is not the local government's currency. And then what do you do? This actually becomes a potential issue when electronic payments mean that it's possible for them to transact in a currency of some other country somewhere else in the world. And if we use digital currency done right, we can actually ensure that transactions take place in the proper jurisdiction. Of course, last but not least, we really want a way for individuals and businesses to actually be able to hold central bank obligations directly, and that's something that bank deposit-based mechanisms or closed-loop payment system-based mechanisms such as WeChat Pay and Alipay and so on do not provide, because ultimately they're providing someone else's promise instead, and we think that that's a security issue on many levels. And not only a cybersecurity level, but a more general national security level, which I think many of the central banks in this conversation would agree. Next slide, please. So our recommendations for this, and looks like the spacing got messed up, but apologies for that. Our recommendations for this system is really to have a centrally issued electronic token. So we do think that central banks would issue this token. Now, maybe it might be issued by commercial banks. It might be issued by commercial banks with the support and enablement of central banks. But the idea is that value should be able to be held outside of banking relationships. And it should be able to be exchanged without reconciling one person's account with the other. That's really important in order to express a way for someone to be able to own their own money. And this really is about owning one's own money. At the same time, we think that there should be clearing and settlement by independent private actors. Now this, of course, enables us to preserve the two-tiered payment system, which is the underpinning of the existing electronic payments using bank deposits. But we also have this benefit of decentralization of the records, which is for the purpose of preventing tampering or unwanted changes to the rules. Now, I know that Aristides mentioned that Brazil decided not to use a distributed ledger for this purpose. I would say that we're concerned about that kind of decision because of the centralized control of the transaction infrastructure. Now, centralized control of the distribution and redemption of assets is one thing, but centralized control of the transaction infrastructure is another. We acknowledge that many of the digital currency systems that exist today that use distributed ledgers rely upon smart contracts, or they manage tokens directly, and these introduce all sorts of problems, and we agree with that. What we want to use a distributed ledger for is not that, not to have native digital tokens and not to have a multi-party computation, but rather to force the parties, a distributed set of parties operating the system, to commit to what's happened so that they cannot unwind that commitment later. We need the distributed ledger to facilitate this immutable record of truth that prevents there from being a cybersecurity risk of there being a single point of failure associated with someone who has control to the extent that they can actually modify the set of transactions that had happened. And finally, we need to, and this speaks to the data protection issue, we need to protect consumers from profiling through privacy by design. So one way to avoid the data protection requirements associated with having sensitive data in consumer transactions is to actually make it so that consumers' identities are not embedded into the transactions at all. And that means that we would imagine a system that has withdrawals and deposits that are very much like cash, we would make it so that payers in transactions are generally anonymous, and recipients would generally not be. And the reason for this is that we do need a regulatory touch point. Regulators might indeed need to understand that a transaction took place, that this particular party was credited. We can monitor them for tax compliance enforcement and also for anti-fraud purposes. But what's crucial here is that we're avoiding profiling consumers by making sure that the payer stays private in transactions. And we think that this is an important way to alleviate some of the cybersecurity burden on the merchant side of the transaction. Next slide, please. And to do this, in general, we use blind signatures for privacy by design, and this system is very much like what Chaum, Grothoff, and Moser have proposed in their paper on this, and also is similar to the BIS Swiss Center's project Tourbillon. It's exactly the same privacy model, and this actually is 40 years old, so this is not new. We use a distributed ledger, but only for the purpose of having an immutable record of commitments. We do not use it to store tokens or to manage transactions directly. We use it just to make sure that the system operators are committing. The assets themselves are held in non-custodial wallets. And we also use a concept that we have called USO, unforgeable stateful oblivious assets, which actually means that the parties that facilitate the transaction don't know what the transaction is about. And the transacting parties are responsible for the transaction, and the asset maintains its own state. So when it comes time for the merchant to deposit the asset into its bank or redeem it for a fresh token, it needs to satisfy compliance requirements that are enforced inside the asset rather than at the time of the transaction. And this also alleviates the risk of that party in the center being exposed to data about transactions that could be valuable as well. Next slide, please. Now, we think that this is a really broad set of research questions around this and around the future of money more generally. And if we look at the shape of the landscape here, the competition for payments infrastructure, chief among them, we'll see that there are many different kinds of projects that we can run here related to financial inclusion, the feasibility of doing digital payments without providing credit, the role of payments in disaster relief and recovery, such as, for example, processing Ukrainian restitution claims, not to mention the risks associated with data extraction or censorship or influence or other kinds of mechanisms for using profiling data inside payments to manipulate populations. We're concerned about these kinds of questions when we think about the architecture of the future of money. And And just very broadly, I want to say one of the main concerns is that the existing prevailing digital payments infrastructure is susceptible to many of these risks precisely because of its reliance upon identification of consumers and the fact that those kinds of mechanisms to facilitate transactions are very heavily reliant upon accounts. We can change this, we can do better, and it starts with making it look more like cash. That's all. Thank you.
Thanks, Jeff. That's great. I just want to kind of make a general comment that after the webinar, the video will be kind of uploaded online for people to watch back. So for those of you enjoying the content and kind of thinking you might be missing things, it'll be available online afterwards. And Jeff, just two very kind of quick reactions to you before I probably go back to Aristides for reactions on what he's heard. And you mentioned USO. Is that your own? There's obviously a lot of acronyms in this world. Is that your own projects? Is that a new acronym for our world?
Yeah. So actually, that acronym is an acronym that we came up with in conjunction with one of our partners, that is based in Toronto. Basically it's this characterization of a kind of asset that maintains its own state and can verify whether it has been transacted with reference to a ledger, which might be distributed or not. We think it should be, but doesn't have to be. But the idea is that that the asset maintains its own state, and the way that it is transacted in the system involves making changes in ways that the ledger implicitly references without actually needing the ledger to know about it at all, which we thought was a really interesting property, and we tried to come up with a way of characterizing it, and USO was our description, but it's new.
Okay, so welcome to a new acronym to an extent, and kind of moving on from picking up on that point is there were elements of what you're saying which brought to my mind the appearances over the last kind of 18 months by the European Central Bank governing board member. I think he's now governor of the Bank of Italy, but Fabio Panetta appearing before the European Parliament Committee on the digital euro project, which has just moved to its next stage. And he, like I've heard people at the Bank of England say, and a lot of similar central banks say, we have no interest in knowing what people are kind of spending their money on. I guess that's the same for the Central Bank of Brazil too. But with that in mind, is there a central bank CBDC project that you feel is aligned with the recommendations of what's the closest? Because obviously some horses have already bolted. You know, there are 4 CBDCs that are live, but obviously a lot of people, I guess, watching this webinar are in the kind of exploration and experimentation stage, yet to make decisions. Is there a project out there that you think is most closely aligned to where you are?
Well, in terms of live CBDC projects, I think the closest one would be the project that the BIS Swiss Center is doing. So that's Project Tourbillon. So the Swiss National Bank has done some work that on a CBDC system that would have privacy by design. And I want to emphasize that the projects that have been proposed by the central banks of the UK and the US and the EU do not have privacy by design. Let's just be frank about it, and that's part of why I think that we're not in the end game yet. These designs are still quite early. We haven't really started having the serious conversations about what we need in order to make sure that consumers can convince themselves using maths that their identity will not be revealed in their transactions, and that there won't be any phishing expeditions done by unscrupulous governments or even hackers. This is indeed a major cybersecurity risk that's associated with the proposed designs that we've seen, and something that we believe will be resolved in the end. But let's be clear. I think that this is. I think that these are early days, and I think the expression that the Bank of England doesn't need to know anything about how consumers are using their money. I think that's right on. We just need a design that actually makes sure that consumers can be confident that no one is looking at how they spend their money, central banks or otherwise. Thank you.
Thanks, Jeff. So I want to go back to Aristides because there's been a lot to pick up on there. After Aristides, I'll go to Franco to get reactions from Franco as well to what we've learned. We've got 5 questions in on the Q&A function, which I think my colleagues on the panel can see. Can you guys see those questions coming in? I think the audience can probably see them as well, so therefore it's not a good use of time for me to read all of them back. I think they're all good questions. Some are more kind of technical and kind of blockchain technology focused, and others are more. I like the one about this kind of skills in central banks, which I think Aristides would probably have and Franco would have particularly kind of good views on. So let's go with Aristides first, then go to Franco, and then we'll go to Jeff to pick one of the 5 questions that he may want to answer, and then we'll work backwards on some of the other questions. So Aristides.
So just to pick one question here, and of course elaborate more about that. In our pilot, Drex pilot, you are using a EVM platform. As I said, there is a Hyperledger base. Because our focus, it's important to say, is to create a platform through a tokenized icon to develop new business model. PIX has a huge achievement in terms of financial inclusion, but only in payment inclusion in terms of payment service. Our challenge is to foster financial inclusion to other financial services like credit investment. For example, we're thinking about a tokenized economy. You can use fragmentation. There is a model that is you have in DeFi environment to make investment more accessible to the population, because we have some private bonds, for example, that we need at minimum 1,000 of reais, for example, to buy these bonds. But in a tokenized economy with fragmentation, you can buy a piece of this bond with 10 reais, for example. That's only one example in terms you can use this technology to promote financial inclusion. But our challenge here, I'd like to highlight that it's about privacy, because privacy in different jurisdictions has a different way, but it's not absolute privacy. That means any jurisdictions should balance privacy with know your customer, anti-money laundering, combat financial terrorism. So we have to balance these mechanisms of the protection that prevent this bad use of money with the privates. So it's our challenge in this private, because DLT technology, people can see the transactions. It's a problem. Oh, but we have zero knowledge technology. Of course, zero knowledge protect you make a payment. But our challenge is to protect all the transactions, the atomic transaction, the DVP, the delivery versus payment transactions. This use case, the technology is not mature enough to achieve that. So you have to work on that. I think it's very interesting, because Vitalik recently published an article about how to improve privacy in the Ethereum environment. I think it's something that we're thinking about. How can we increase the privacy, the mechanism, the technology privacy to use DLT to real use cases.
Aristides, thank you. And I've just been informed that the wider audience cannot see, although we can't see all 6 questions, which we've now up to 8 questions, which we've now had. So I just wanted to read this question out. So I'd like, you're working at a central bank now. I'd like to hear you on this. So the question is from Chris Tumulty, and it is, governments often struggle with recruiting and retaining IT security expertise. So I'm so aware you've been for the central bank for 25 years. So the question is, how do we build this capacity and culture of security in our governments and central banks, especially when the government typically pays much less than the private sector? So Aristides, over to you, and then Franco.
Well, it's a answer that I'm still finding out how to answer this question here in Central Bank of Brazil. It's because Central Bank of Brazil has, of course, I said that human resource problems currently, because we have 10 years that we don't have a new employee. It's a problem because the Central Bank of Brazil is not 100% independent. budget, for example, independent of the government. But we have, for example, work together employees in our central bank and try to hire an outsource company to work together and to improve your capacity working day by day, the everyday work, then work together in terms of cybersecurity. Because the Bank of Brazil have employees that are experts in cybersecurity, but we have outsourced professionals that work together. The second advice is to look, for example, some international organisms. Some international organisms are promoting cyber exercises for the community, to governments, to central banks, to increase the cyber resilience. For example, BIS promote every year a cyber exercise to central banks to improve the cyber skills, our cyber security skills in central banks. So I think the final answer is to have to work together with others to increase the cyber expertise in your organization, with the private sector, outsourced professionals, or international organisms, for example.
Great, thank you. And as you said, I suppose the Central Bank of Brazil is in a been in a kind of trickier situation on the HR front than other central banks, kind of in recent times. But so Franco, there's so many different aspects to this, so I'm sure you've got one or two points you'd like to pick up on. And then after Franco, Jeff, I'll come back to you because we've now got 8 questions in. I think you can see them, and there's one or two that are very specifically, I think, picking up on kind of technical points you've made. So if Jeff, I can come to you and you can maybe try and answer those, and then we'll pick up on a new thread. But Franco, to you to react to what you've heard.
Thank you, and thank you, Aristides, for setting this in. And it is true that there is this big gap of cybersecurity globally. And if we kind of expand this point a little bit, we see that this is not only for developing or developing countries. So the risk is even bigger when we think about low-income countries or emerging economies. So this gap, you can see how it can have a potential to impact, these countries or this economy that want to embark into the CBDC. However, in my experience and some work that I've been doing with some of the authority, we find that there is really this collaboration between the central bank and commercial bank. I can name some countries like Jordan, where there are some commercial banks taking a role educating users, training the young professional and graduate. And this is not only Jordan. There are also other countries where we see private organization, like telecom company, taking this role on building this cybersecurity capability within the country. So this is one of the commendable role that the private sector in collaboration with central bank are doing, at least to build this capacity and training within the country. But we are also recommending central bank in bigger initiatives like this, like CBDC, to work with other organizations like universities that can create new talents, and not only to create new talents, but how the government and central bank and even commercial bank can retain and continue to upskill the trained experts. So the collaboration can expand to other, other levels such as colleges, universities, private entities, or even international organizations, as Aristides said. IMF and World Bank or BIS also, conduct this capacity building on different ways, and authority can ask this organization on building some of the capacity in the area of cybersecurity or cyber resilience. And just to conclude on this point, it's true that CBDC or CBDC project that we are seeing has kind of taken a different approach, because we have many payment systems, but it was rare to see countries publishing the report of what are the lessons learned, what are the technical difficulties they have faced during the implementation. However, from the CBDC perspective, we see how countries are happy to share their findings, their challenges, which means countries has this opportunity to learn from these countries that are implementing their CBDC. So this is another opportunity that, these technological advancement, new payment system like CBDC are presenting to all of us to learn from each other. And we are also seeing some countries as well, deciding to collaborate with those countries that are conducting an experiment. So we have some authority that will engage with BIS and other countries just as an observer, just to see how these projects or CBDC projects will be evolving, will be conducted, and learn from them. I think I will stop here and thank you again, and I will welcome Jeff for any comment. Thank you.
Yeah, thanks, Franco. Jeff, over to you then to react to what you've heard, and also maybe have a quick go at answering one or two of the questions that seem to be kind of more aimed at you. Then I've got a kind of a new thing I kind of want to throw in a UK context. So Jeff, over to you.
Yes, thank you. So first, I want to touch on some of the points that came up. I think particularly with Aristides and the privacy model. First, I want to say that many designs that we have for digital payments today rely upon external credit and enforcement mechanisms, and we have come to depend upon these mechanisms. And thus, when we think about these, we often assume that we need to build these kinds of mechanisms into every payment solution that we might provide in the future, and that's just not true. When we design the future of money, we can do better. We can rely less upon external enforcement mechanisms and external credit mechanisms inside the payment channel. And I'd like to encourage us to think about ways in which we can redesign or design this future of central bank digital currency to be more like cash and less like bank account linked transactions. Now, the issue with privacy is that either you have it or you don't, I have to say. And and all this talk about compromise. It's not possible for a user of a payment mechanism to be convinced that the data, once collected, have not been used to profile that user without his or her knowledge. And deferring the task of arbitrating what data can be observed versus not to powerful authorities or system operators is really just tantamount to not having privacy at all. And this is to say that this is not to say that there are never circumstances in which we might require consumers to provide additional information in a transaction, and consumers are already familiar with these kinds of requirements. For example, if you're buying an international flight, or if you're purchasing certain kinds of materials, or you're engaging in certain kinds of enrolling in certain kinds of schools and so on, you need to provide additional information. But that's not to say that this information needs to be provided inside the payment mechanism. It's not to say that we need to rely upon banking infrastructure to do all of this law enforcement task for us. And I would like to suggest that in all cases, users really need to know what data are being exfiltrated from them from the outset, as that becomes the basis of their privacy. Also, I want to say that it's a mistake to think that there will be one payment system to rule them all, CBDC or otherwise. Even after we have CBDC, consumers will still use interbank transfers. Consumers will still use cash. And it's a mistake to assume that we're designing one payment system to replace everything else, because really every kind of payment system has its own set of costs and risks. And they will be useful in certain circumstances, and we just need to provide an option for individuals to engage in the digital economy with a cost and risk profile that is more similar to what they can do in the cash economy. And that's not to say that we cannot take advantage of this to provide tax enforcement and anti-fraud mechanisms and recipient monitoring. And I think that this gets to the question of AML KYC requirements, which was one of the questions in the chat. AML KYC is about banks, and indeed, it's about the obligation of banks not to let lend legitimacy to practices which might be criminal in nature. And in the model that we've proposed, all of the parties are subject to AML KYC because all of the parties receive CBDC. Either you receive digital currency by withdrawing it from your bank, which gives you an AML KYC check, or you receive CBDC from a consumer, and you will need an AML KYC check when you go to spend it again or deposit it. So all of the parties will always be AML KYC. Now, I want to point out in particular that there is an explicit carve out in the FATF Financial Task Force recommendations for cash, for certain e-money, certain cash-like instruments. And that's really essential to take a very close look at that, because when we're talking about these kinds of transactions, we are really talking about transactions between in the retail space, a transaction between a retail consumer and a merchant. And there is no circumstance in the world in which my trip to a coffee shop is going to result in me, by virtue of paying the coffee shop, committing some hostile terrorist attack. That is just not the case. And we talk about paranoia. I think we need to really keep a perspective on this. We're not proposing that people would use this system to transact millions of pounds worth of value across borders or even interbank. We're talking about retail payments, which is to say the basis for consumers' belief that they own their own money, which is essential to making this work. So I do believe that this is compatible with the spirit, if not the letter, of AML KYC requirements around the world. And it's also important for consumers to know that they will not be subject to a phishing expedition simply because their identity data were linked to a transaction. Now, I also very briefly I have to address the programmability question because it was addressed to me. Programmability is about fungibility. Restricting tokens and coloring them in a certain way to make them, or shading them in a certain way to make them so that they can only be used for certain purposes, means that they're not fungible with other tokens. So in our proposal, the tokens are not programmable, because then they would not be fungible and then they would not be money. But that's not to say that we can't have programmable payments or mechanisms for instructing an escrow agent or a bank to conduct payments using the system in this way. But let's be really clear, if we want to have money, then we want something that's fungible. And if we want something that's fungible, then we cannot shade it with special restrictions. Full stop. I'm sorry to be so blunt. Thank you.
Great. Thanks, Jeff. I just wanted to, before I want to kind of put a separate kind of question in there. The first question that came in is from Thomas Shaw. And it says, will any of these CBDCs be built on decentralized protocols like Ethereum, or will they all be on permission blockchains? We probably only got time for one of you to have a go at answering that, but my reaction would be, of the 4 CBDCs that are kind of definitely live now, I know that the Jamaican CBDC, I think, made a thing of saying we're not blockchain. So I think that almost answers the question. So that the Jamaican one isn't on blockchain at all. But Thomas was first to ask his question, so I wanted to at least give that one an answer. So does anyone want to know it?
Well, may I briefly respond? Blockchain. So I'm responding to this as the convener of the ISO working group on foundations of distributed ledger technologies, wherein our working group created the definition, the ISO definition of blockchain, and let's be really clear. In many of these cases, when we talk about a system, it probably is. It might well be a blockchain system without being an Ethereum-like system. And if we look at our definition of blockchain, it's a distributed ledger with confirmed blocks organized in an append-only sequential chain using cryptographic links. That was from the published version of our standard. That is to say that when we talk about blockchain systems, we could be talking about all kinds of systems that have that characteristic, where the immutability is an emergent property of the distribution, the independence of the participants in the system. So it may well be a blockchain without being Ethereum-like. And quite frankly, I think the answer to whether it's going to be Ethereum-like is no. I don't think it's going to be Ethereum-like because I don't think that we need multi-party computation in order to facilitate transactions. I don't think we need to have native digital tokens to facilitate transactions. So it's not Bitcoin-like either. And I also don't think that we need I also don't think that we need anything associated with permissionless ledgers, which can always be compromised by those who have the power to do so, which I think is going to be a major source of concern for any serious country that wants to rest upon this kind of infrastructure. So yes, I do believe that they will be permissioned blockchain systems. Now, when we say based on, does that really mean with native tokens that are transacted the way Bitcoin does? I think the answer to that is no. Thank you.
Great. Thanks, Jeff. So I'm aware we've kind of got 9 or 10 minutes left, and I want to make sure everyone has a good kind of 2 or 3 minutes at the end to bring things to a close. But I just wanted to read something out, which is probably the clearest summary, one of the clearest summaries I've seen on CBDCs and cybersecurity. It's the UK report done by the UK House of Lords. So the UK has had a recent, the Bank of England and Treasury have done a consultation on the potential digital pound, and I think the next move is over to the Bank of England or HNT to respond to that. But this is a House of Lords report in January 2022, and they said there are 2 clear security risks for a CBDC system. The first is that individual accounts managed by the private sector could be compromised as a result of cybersecurity weaknesses. The second is that a CBDC system as a piece of critical national infrastructure would be a target for attack from nation states or criminal acts. Such attacks would risk the exposure of sensitive payments data and the loss of national wealth. No design will guarantee absolute security. I thought that was a very kind of clear kind of way of expressing that. And it again takes me back to Franco's slide, which had expansion of the attack surface. It takes me to Aristides as one of his slides, which had 5 kind of more specific threats there. So if I was to put myself in neutral shoes, I'm not sure I'd walk away from what we're hearing absolutely reassured, but you know, our aim is to kind of to talk about these things, I guess. So we have 7 or 8 minutes left, and I want to kind of go around in order. So we'll start with Aristides, and I suppose the final question is, you know, any takeaways you've had from the discussion today, but also what's next for you kind of gave an overview at the start of where you are with Drex. Kind of over the next year or so, what are the kind of priorities for Drex? And also just anything else in the world of CBDC? What projects beyond Brazil do you think are going to be shaping the discourse over the next year or so? So that's kind of the same question for Aristides, Franco, and Jeff, and then we'll bring things to a close at 1:45. So Aristides, over to you.
Thank you very much, Ian, for the opportunity. Thank you for the audience. I think I'm from technology, and I like to say that DLT or CBDC is not a silver bullet that could be a solution for all problems. I think it's important to forget a moment for the technology, thinking about the use case, what you would like to deliver, what the use case, what the requirements. Try to redesign your financial system, use this innovative technology. That's the opportunity. And I think it's important to the government, to the regulators, to work together to the private sector to find out what the use case that makes sense to your jurisdictions. I think we are in a singular moment in the technology because we have different initiatives, not only CBDC, AI, and other ones, that we can think about in the future. And based on that, it's a moment, for example, to think about what the definition of money, because sometimes our mental model of money, it's a lot of based on paper money. Forget a moment of that, thinking about what the concept and definition of money that we would like to the future in a digital environment that should be inclusive, It's important to that because it's important to have access to the all population. So we are in a singular moment. We don't have one answer for all countries around the globe, but I think it's important to everyone here that in the different countries to work to find out the solutions to address the problems that each country has in terms of financial inclusion, economic development, but using different technologies. Not thinking about a new technology or one solution. Thinking there is the portfolio of solutions that we can have under your hands to solve these problems. That's my final mention that I'd like to share with the audience. Thank you, Ian.
Great, thanks, Aristides. That's if we don't get time as we get cut off on the end, good luck with all the challenges and opportunities with Drex. It's such an interesting kind of project to watch. Franco, your kind of closing reactions to what you've heard and those 2 or 3 questions I posed.
So thank you so much. So first of all, I just want to share that these CBDC undertaking seems to be complex undertakings, and it involves a number of stakeholders. But we are also seeing that while these CBDC are coming up as some opportunity due to the innovation that are taking place, we are also seeing that they are also kind of expanding the footprint, the digital footprint, the attack surface. So at the end of the day, it is the role of the central bank in collaboration with stakeholders to assess the threat and to know their position in terms of their cybersecurity readiness. And this is to say, if they want to embark into this project, what exactly are their cybersecurity interventions? How strong are they? And it's not only about cybersecurity, but how resilient they are in case of any disruption of the payment system. So it is just to say that, they have to balance between, the intervention that they are putting in place, how to balance innovation in a secure place, but also how to remain resilient in case of an attack. And just to say an interesting topic that I see coming up and continue to evolve, I think in the realm of CBDC is the offline CBDC. This is still a new area, and many jurisdictions are continue to research on it. And lastly, what I would just like say when we talk about cybersecurity and resilience, I think it is important that the involvement of many stakeholders and even private companies in designing and coming up with cybersecurity product or solution. It is the question to ask ourselves and our organization, how can we continue to remain agile so that whichever solution that are developing, how can they become resilient and agile to cope with evolving cybersecurity landscape? And thank you and welcome, Jeff, for your concluding remarks. Thanks.
Thanks, Franco. We haven't really covered offline payments at all, but it's such an interesting area. I know that the BIS have done various projects and research on I know the Bank of Canada have done some interesting projects on how offline payments can happen. But Jeff, the final word in about a minute and a half for you.
Just briefly, offline payments, there's nothing better than this. And I think the results are going to show that there's nothing better than this. And this is cash, by the way, holding up a bit of cash. Now, I think we need to be really clear about what problem we're trying to solve. And a few years ago, the House of Lords here in the UK published a report characterizing CBDC as a solution in search of a problem. Well, make no mistake, there is a problem. What we need is cash for the digital age. We need a way that people can transact value using value held outside of accounts that can be used to facilitate transactions without, that is a direct central bank obligation. Now, I think Franco said it very well, so I'm going to mostly reiterate. There are 3 main points on cybersecurity here, and cybersecurity and payments is dependent upon, number 1, the functions and interactions intrinsic to the components of the system. So authorization systems that rely upon identity credentials are particularly dangerous because of the centrality of their role. Number 2, the digital footprint, and Franco said this, the value of the data being held by system operators is a major problem, so we really need to minimize that in whatever design we produce. And last but not least, the size of the attack surface. And Franco said this several times. This is absolutely significant in the case of retail CBDC. If individual consumers, everyone, trying to use their mobile phones to conduct transactions this way, there are going to be major challenges that we'll need to overcome, and we'll need to think very carefully upon how to make sure that value that individuals and businesses are holding can be isolated from the risks of devices that might have internet uplinks and might be compromised. Thank you.
Thanks, Jeff. Right, that I think bang on cue. Thank you. That brings everything to a close. Thank you to the audience for staying with us, and thank you for your questions. Apologies if we've done our best to get through those that we can. Apologies if we didn't get round to addressing them. My own email address is ian.hall@globalgovernmentfintech.com. So if there's something you particularly want to follow up on, do just let me know. But thank you to Aristides, to Franco, and to Jeff. We're going to be publishing a write-up when we've got time to do that, and to ensure that you receive our ongoing editorial content, including topics including CBDCs. Do sign up for Global Government FinTech's weekly email newsletter. If you go to the website, there's a button that looks like that for you to click. We also encourage you to follow us on LinkedIn as well. If you just go to LinkedIn and type in Global Government FinTech. But thank you again to our three-strong panel, and have a good rest of the day. Thank you very much.
Thank you, Ian.
Thank you.